Hi, I'm Bruce Brumberg, Editor-in-Chief of MyStockOptions.com. We're a popular source of knowledge, content, and tools on all types of stock compensation. It's great that you've received a grant of restricted stock. I want to help you make the most of it. In our experience, it's likely you have 4 questions we often hear from people with these grants. What is restricted stock? What is it worth to me? What are the taxes? And what decisions do I need to make? In this first video in this 2-part series, I will cover the first 2 questions. Whenever I refer to restricted stock, I'm also talking about restricted stock units and performance shares unless I say otherwise. Let's look at the first question. What is restricted stock? Simply put, it's a grant of company stock that's yours once it vests. The need to vest is what makes it restricted. With restricted stock, but not with restricted stock units, you usually have voting and dividend rights during the vesting period, if your company pays dividends. With RSUs, you might get dividend equivalents based on your plan. Vesting usually means you need to work at the company during a specified length of time for all or parts of your granted shares to vest. Vesting can also be based on the attainment of specified performance goals, such as total shareholder return, revenue, or earnings per share. These can be called performance shares or performance vested restricted stock. Normally, the vesting stops when you stop working for your company. However, you want to check your stock plan for any provisions it may have on the treatment of vesting should you retire, become disabled, die, or if your company is acquired. Let's look at a straightforward example. You have a grant of 1,000 shares of restricted stock. The stock price at grant is $11. It vests over 4 years at 25% a year. The way vesting works is that each year, on the anniversary date of the grant, you acquire outright 250 shares. After 4 years, you have a total of 1,000 shares. The shares on each vest date will appear in an account at the brokerage firm that your company requires you to use for the initial transfer of vested shares. So before vesting occurs, make sure you have activated that account and have completed any necessary related forms. At vesting, you can then keep, sell, gift, or pledge these shares as you like, subject to any rules your company may impose, such as those related to the prevention of insider trading. Your ownership at that point is no different than that of a regular shareholder. Let's look at the second question. What is this grant worth to you? Well, this depends on the stock price when each part of the grant vests. Continuing with the example of the 1,000 share grant. At the end of year 1, 250 shares vest and your stock price is $12 per share. These shares are worth $3,000. At the end of year 2, another 250 shares vest and your stock prices drop to $10.50. These shares are now worth $2,625. Even though the stock price is now lower at vesting than it was on the grant date, your shares still have value based on the current market price. At the end of the 3rd year, when the 3rd slice of 250 shares vest, your stock prices climb to $14 a share. These shares are worth $3,500. When the last 250 shares vest at the end of year 4, your stock price is $15, so those shares are worth $3,750. Together, the 1,000 shares resulted in $12,875 of additional income for you. In part 2 of this restricted stock video series, I will cover taxes and what decisions you need to make. For more details on restricted stock, RSUs, and performance shares, including financial planning ideas and tax return reporting, please see the sections about these grants on MyStockOptions.com. If your company or stock plan provider licenses content from us, you can find that section in the MyStockOptions.com Knowledge Center. For information on custom versions of this video, please email info@MyStockOptions.com. Thank you for watching.